If you're really a millionaire, it's time to pay your tax. Sure, but I'm keeping this for repairs, this for depreciation on my rental, and this for interest on the loan I took out instead of selling anything. Wait, you didn't sell anything? Why would I? Selling is the only part of this that gets taxed. That's roughly how tax law works for anyone who owns assets instead of just earning a paycheck. And right now, it's one of the most talked about issues in Washington. Stay with me, because by the end of this video, you'll understand a strategy so significant a sitting governor just called for it to be banned by name, and why the world's newest trillionaire is its most famous example. Here's the sentence that explains everything. If you don't sell, you don't owe. Income tax only applies to income. The wealthiest Americans have restructured their entire lives to avoid ever technically having any. Elon Musk never took a salary at Tesla. He was paid almost entirely in stock. This year, he became history's first trillionaire, not from a paycheck, but from rising Tesla and SpaceX shares. On paper, he's worth more than most countries' economies, but paper gains aren't taxable. Only sales are. So when he needs cash, he doesn't sell. He borrows against the stock. The bank hands over hundreds of millions. No sale means no tax, just interest, which is far cheaper. Here's the twist most people miss. When wealthy shareholders die, their stock passes to heirs at its current value. Every dollar of growth during their lifetime disappears from the tax system forever. It's called a stepped-up basis. And cable billionaire John Malone has used exactly this, according to the Wall Street Journal. Borrow instead of selling, then reset the tax basis at death. That's the strategy now dominating tax policy debates in 2026. Buy, borrow, die. This isn't a rumor. Weeks ago, Senator Ruben Gallego introduced federal legislation targeting this exact loophole. Governor Gavin Newsom called it a tax-free lifestyle loan for the ultra-rich and demanded Congress close it. California voters are deciding a ballot measure this November to tax billionaire wealth directly, because current law can't touch money that's never sold. Here's the number that makes it real. The top 1% collectively borrow over $1 trillion against their assets, largely tax-free. Meanwhile, a Wall Street retiree who actually sold $400,000 in stock last year paid around $50,000 in tax. Someone earning that same $400,000 from a paycheck would pay nearly double. Same number, same country, completely different tax bill, because a wage is the most heavily taxed dollar in America. So here's the real question. It was never, how do billionaires cheat the system? They don't. Every move here is legal and sitting in public tax records. The real question is why owning assets gets rewarded and earning a wage gets punished. A debate happening right now in Congress and on ballots this November. This changed how you look at your paycheck. Hit like, subscribe, and send this to the one friend who thinks the tax code treats everyone the same. It doesn't. And now you know exactly why.